Hey, Brian, it's Joel from Pre-Market Prep. We are live on the air. How you doing today?
I am doing wonderful. How are you guys?
Good. We got a lively show going on. This might be one of our best days with Farian, and now we have you giving us your take on retail. Just a big macro here. Just what do you think of the retail earnings so far?
Well, we haven't gotten a lot of them, but if you're using Under Armour reported today, I think the quarter was very, very strong. Under Armour just continues to win. They're getting significant share of the floor space in Macy's. You certainly see it in Dick's Sporting Goods, and I think Nike should be paying more attention to what Under Armour is doing, specifically within the fit of their products and the quality of their product. I think Nike can learn a little bit from Under Armour at this point. And even outside the retail, I'm going to lump Chipotle in the retail sector. They're still a consumer-focused brand. You saw it's in 3 quarters in a row of sequential acceleration in their same-store sales, which already has me thinking to what Starbucks can put on the board. You know, we came out and downgraded Starbucks 3.5 months ago, worked out good, but the trends that we saw at Chipotle were really encouraging. So I wouldn't be surprised if you do see a little upside in Starbucks' U.S. same-store sales, and part of that will be certainly because of the amount of gift cards that they sold during the holiday season.
So you like the CMG?
CMG, yes, CMG, we upgraded, and I think actually Benzinga picked it up 2 months ago. We upgraded it. It's been a pretty good call. We didn't like the stock, obviously the stock reaction when they were reporting earnings last week, and I think that was a function of what the company had to say on input costs. But the bigger takeaway for us was just more people continue to pack these stores at almost all hours of the day, and you certainly see it playing out on Twitter. And it leads me to believe when they do raise their prices, I think they'll raise prices by about 4 to 6%, maybe a little bit higher than they guided to in the earnings call. You're unlikely to see a downtick in traffic into their stores, and I think it's an important takeaway.
Yeah, but it had an ugly day on earnings, and now it seems to be filling that gap from February. Now, just kind of hanging out at the $5 level. So, if you're looking to pick up something on a decline here, that's CMG has certainly done that. GGB saw your video on MCD there. Did they get your order wrong?
Well, McDonald's is an interesting company to follow. They didn't get my order wrong, but they didn't get me in and out of the store quick enough, in and out of the restaurant quick enough. And that has been one of the biggest challenges to McDonald's at this point, the operations.
Really?
The lines are significantly, there's too many people in the store coming in at once. It's a high-class problem to have. They need to get those people out of the store much quicker. So you're now seeing McDonald's come in there, introduce new prep tables. So those will be fully installed throughout the U.S. supposedly by the end of this year. That's one factor. Another factor is inflation. You know, McDonald's called out a 2% price increase, I think globally on its earnings conference call, but that's not enough, especially when you have some of their overseas, key regions overseas. They're introducing new items, let's say avocado burgers and beef burgers, and I'm wondering if some of these burgers are even profitable. And that's a disturbing thing because I just don't feel as though they have the pricing power running their market.
Boy, those
to offset cost inflation.
Yeah, avocados are expensive. I mean, I don't see that, fitting into their dollar menu there. I don't even know what an avocado costs you when you go to the store. But yeah, that's they're rolling that out overseas, or are they rolling that out here?
That avocado burger, I believe, is in Japan, and it's starting shortly. But by the same token, they've also introduced curry sauce burgers in the UK. So you have you have an operation, I think, that is just slow relative to what your better trends you're seeing for Panera Bread, Chipotle, more innovation, and I just don't feel as though they're able to keep up with inflation. I think at this point, McDonald's is a horrible investment. You can do much better elsewhere. I just feel as though the Magic team is not getting it, and they are losing market share in breakfast. And they tried to downplay on the earnings call, but I just wasn't buying it.
I mean, this thing, if you look at it over 100, the last few times or the last few years it got over 100, it just hasn't held. So, been trading in a major range while the market has just been screaming higher. So, definitely the market's confirming your thesis on this one. J-Dot here, do you cover Dunkin' Donuts at all?
I do cover Dunkin' Donuts. We do keep that in part of our group because we do cover Starbucks. I know Dunkin' Donuts came out today reporting their numbers. I would have liked to see more within the U.S. Dunkin' business. I know they mentioned weather, but they've done some great things in marketing. When you visit the Dunkin' Donuts stores in the U.S., their stores are jam-packed with so much marketing, cross-promotional things with Baskin Robbins. I would have liked to see more, but that goes back into what I was saying earlier on Starbucks. You put all the pieces together, Starbucks should have a pretty a pretty solid quarter.
You know what the problem with Dunkin' Donuts is their breakfast sandwiches. I'm a big breakfast sandwich guy, and they're not good at all. I've had it a couple of times. They need to
Well,
improve.
that's it. Well, they are better relative to what Starbucks is selling, and I think Starbucks has a long. They have a long way to go to better present their products to the consumer. All these new menu items. I will say, Dunkin' Donuts, at least they look visually more appealing. But one of the gems, believe it or not, in Baskin Robbins in Dunkin' Donuts has been Baskin Robbins. It's a story. It's a great comeback story that's going untold, and they're just doing so many phenomenal things within that brand on social media to drive sales, specifically on Facebook and Instagram.
Okay. The J.C. Penney here. I saw you kind of lightened up on it a little bit. It was just hanging out at $9 forever and a brother. Tight ranges, consolidated, and then broke down. Couldn't fill the gap. Has that huge gap from the last earnings here. Came back to 7. Now we're just hanging out at 8 here, right in the middle. Earnings are coming up. How you leaning on JCP?
Well, we upgraded it. We upgraded JCPenney about, I think, in the low sevens. Maybe it was about 2.5 weeks ago, and it's a call that I slept on. I locked myself in an enclosed room before I came out and said something like that because we had had a sell on JCPenney since January 2012, and I remember that day as if it was basically yesterday. And what we're seeing in JCPenney and why we did this is because our checks indicate when the weather has been good, people are returning to JCPenney, and they're not just buying one shirt and leaving the store. They're shopping basically the key apparel departments. And that's pretty important because the promotional levels on JCPenney, while still, how can I put it, they're still high, they're not as promotional as you would think given everything that's happened in the weather over the past couple of months. So people are returning to JCPenney, and I'm starting to believe that the market doesn't necessarily appreciate the profitability. They could return to profitability by the holiday season of 2014. I don't feel as though the market appreciates that. And plus, there are a couple of geeky things that we found in the 10K that are worthwhile.
Okay, so you're just doing on the metrics. I mean, the numbers that are coming in, your personal observations. Are you taking in chart patterns at all into account, or are you just going on what you see in the stores?
Well, we're going by what we're hearing and what we're seeing in the stores, what we're hearing from contacts in other stores, less so on the technicals, because the fact is this, if JCPenney can string together at least, and now I guess this is what I'm banking on, a decent back to school and a decent period up until back to school, there is a reasonable chance they could return to some form of profit, even though it's minor to the holiday season of 2014, and in no way priced into the stock at this point.
Okay, let's go to the big box here. Walmart running into trouble here at the $78 level. Had sell-offs with the market, but just seems to be running into a wall here at 78. Well, what way you leaning on Walmart?
Well, the simple thing is on Walmart. If you want to lose money, go ahead and buy Walmart. I feel as though there is no reason to own Walmart shares, and even along the same lines, there's no reason to own Target shares here. I think both these companies have had very challenging first quarters. I think Walmart bought too many seasonal items once again. They remain severely disconnected in the U.S. business relative to what their consumers are doing. To have 5, 6, 7 aisles dedicated to Easter. And you see the after effect beyond Easter, bulging inventory levels of that Easter product. It's disturbing. So I think Walmart has an inventory planning issue. Their margins are under pressure. They're investing more to lower prices because of what Amazon's doing. And I feel as though the market just doesn't get that. So there's no reason to have exposure to that.
Did you see that they're trying to roll into medical clinics in some of their stores? Did you did you see that with Walmart? Just some walk-in medical clinics at all? Did see that?
They've been looking at that for a while. It's just another area for them, or it's just this mindset of Walmart that they have to be doing everything or be everything to everybody. And I think with the new CEO at the helm, they would be it'd be in their best interest, I think, to take a step back and reflect on what is going on in their stores. And they cannot, if they walk a lot of these stores, they see things that we see, operationally, they're just not there. And you can see why, because the operation is just not up to snuff, why the financials continue to underwhelm. I believe they warned on earnings 3 times in 2013.
Yeah, not a good sign. And Costco is selling a little bit higher end products here. Costco's also running into a resistance area. It's really come off its high and having a hard time recovering. Been in quite the trading range. How you looking at Costco?
Costco's a name we've started to be doing a little more research on. Me personally, I've covered Costco for close to 11 years, but I've begun to delve into a little bit more because with inflation has been picking up, and you're starting to hear more accounts of this. Certainly with McDonald's, you probably hear Starbucks issue a menu price increase, but inflation is picking up, and historically, Costco has done good during periods of inflation because their sales will get a boost, and they're able to gain share from other companies who just have to raise their prices and they lose volume. So Costco's a name we're going to be looking a little more into over the next 3-4 weeks.
Okay, Best Buy here. Boy, they came out with that bad news a while ago and just have not been able to recover. Dead money here as well.
We have a sell. We came out. We have a sell. You have a sell rating on Best Buy. It's almost along the lines of Walmart. To play retail right now, you need a giant catalyst. Under Armour has catalysts. They're releasing a phenomenal product, but within Best Buy, there is no reason to own the stock because certainly weather in the first quarter, but they just don't have the upgrade cycle at their back. So that's first. And second of all, they're investing tons and tons to lower prices online and then within stores to compete with Amazon. And I feel as though it's the quarters first, second, and third before the holiday season where their margins can surprise to the downside because they're investing so much in price because they don't have the traffic to their stores. So I think when they do report earnings, you're going to see another very challenging quarter from them.
Okay, and so what else? Is there things that you're looking, you've been a little bit bearish on as well that you're kind of looking, perhaps to lighten up a little bit, maybe take a look at on the long side?
Well, I would say, before I got back on, we were looking a little more into Foot Locker.
Okay,
Foot Locker's a name I've liked. Yeah, Foot Locker I've liked for a long time. They're benefiting. When you see an Under Armour come out today and they put up a 30% sales increase, their footwear sales outpaced their apparel sales. How do you want to be thinking about, well, how do I play that? It's through a Foot Locker. And you go back to what Nike reported a couple weeks ago, just another strong quarter. These companies are being able to pass through price increases. Foot Locker's raising their prices, and the consumer continues to go into the stores and buy this new innovation. From both of these companies, Nike and Under Armour, are going head-to-head and basically an apparel and footwear war that nobody's talking about. So I think Foot Locker, I think it's valued about 12.5 times forward earnings. That's a name that makes sense to me.
Okay, and Nike here, the big bad leader here, sold off back down to the 71 level. Now coming back up to 75 here, approaching some major resistance here. This stock just seems to sell off and always come back. Is that what you're rating on Nike?
Nike, we're obviously neutral on at this point. One, they're investing a lot ahead of some major global sporting events, certainly the World Cup. They're still putting a lot of money. I know they had the fuel ban news recently, but they're putting a lot of money into still developing technology that coincides with your mobile devices. So a lot of investment spending, and also they're really exposed to currency. So I think as long as currency continues to be very volatile as it has, we're seeing that a consistent theme throughout earnings season. I think Nike will have a hard time breaking out. It's a name that you want to, I think, just put down, save it on your watch list, and return to it maybe about a week or two before they report earnings.
Okay, and then make a play into it. And then Amazon here, been under some selling pressure, trying to compete with Netflix on some things, getting a little pop up here. But hey, this stock is way down here from over $400, traded under 310 last week. The chart looks broken. What about your opinion on Amazon?
Amazon continues to not be my cup of tea. I know we always hear it's overvalued argument, but nobody goes into why this is happening. My view is they just don't have the pricing power. As long as you have Amazon, the culture continuing to be that we're willing to sell general merchandise at a loss to hopefully sell some software, I think their margins and their returns will continue to be rather underwhelming. And they are very much in a price war relative to Walmart and Target because those companies are taking the fight back to them. Also, I believe it's the middle of May, Amazon in Florida will start collecting sales taxes from the likes of Amazon. There all have been studies popping up where Amazon sales have declined, where now the sales tax started to come out. So that's another area of concern. And finally, I don't know much about Amazon because when you get onto the earnings conference call, you don't know much about the company. In my opinion, it's very secretive. And if I'm being forced to pay up to own a stock, I want to know more of what the company is doing. And Amazon tells you nothing.
Right. Now that's if you can't find out about the company the way you do your homework and stuff, why
I think their disclosure practices are actually quite despicable. I mean, if you look at their every earnings conference call sounds the same. This company is giving you no information, and you hopefully try to find more in the financial filings, and they don't give you anything. So it's hard to get excited about a company that continues to underwhelm with their return metrics and their operating margin. They don't tell you anything. Well, I need more meat. I need to hear more of the story from the management team.
Okay, just kind of a little bit of a macro view here. The market looked like we're really going to have a major correction a couple weeks ago. Looks like earnings is kind of pulling us out of the abyss here. Great, earnings by Apple today. Other companies reporting strong earnings. Retail is later in the earnings season here. Market up here near all-time highs. Are you just kind of relating what you're seeing in the retail sector to the overall market? Are we good to go to new all-time highs here?
I've been surprised what I've seen. We've seen notice, I think, over the past week and a half, a surprising positive turn of events in earnings season. It did not, in my opinion, start off well. There are themes that companies' margins are still under pressure, and how are they beating by a penny, which is no great shakes because earnings estimates from S&P came down pretty significantly into the quarter. So how are they beating? Cutting a couple costs. But over the past week and a half, now you're seeing stronger beats from many companies, certainly like a Caterpillar. An Under Armour beat by 2 cents. You've seen a lot of strong beats today, for example. So I think now you're starting to get a justification for why the market has run, at least maybe over the past week and a half, and it leaves you more encouraged as we get, let's say, into the next non-farm payrolls report, which could be a major catalyst for the next leg higher in the market because you've had initial claims come down significantly. You're seeing improvements in the regional Fed manufacturing surveys. You have the earnings beats. And one thing that companies are saying is that activity has started off very strong, or in most cases, at least strong in March and April as the weather has improved. So all signs point to at least a stronger than expected April employment report, and I think that'll be good for stocks.
Okay, all right. We've had Brian Sozzi on, of Belus Capital Advisors, giving us a just detailed, well-informed, personal account of what's going on in the retail market. You can't substitute for going into those stores. And I don't know, Jake or somebody made a joke that we gotta get Sozzi out from the stock room to come on to the show and stuff. So Brian, your analysis is really appreciated. Thanks for coming on, and we hope to speak to you soon.
Thanks so much. It's game time, brother. Have a good day.
Okay.